Something strange is happening in the silver market right now, and most people aren't even noticing it. On the surface, everything looks normal. Prices have pulled back a bit, volatility is high, and analysts are divided, but beneath that surface there are subtle signals that suggest something much bigger might be going on. And the question that serious investors are starting to ask is this: is smart money quietly leaving silver? Because here's the reality. Silver recently surged to extremely high levels, pushing toward the $90 range, and even higher during the peak of the rally. Everyone was excited. Retail investors were rushing in, social media was full of bullish predictions, and the narrative was simple. Silver was going to the moon. But now the situation looks very different. Prices have dropped sharply back toward the $70 to $73 range. That's a significant decline in a short period of time. And while many people are calling this a normal correction, others are starting to see something else, something deeper, something more strategic. To understand what's really happening, you first need to understand what smart money actually means. Smart money refers to institutional investors, hedge funds, banks, large asset managers. These are the players who move billions of dollars. They don't react emotionally. They don't chase hype. They move based on data, timing, and long-term strategy. And most importantly, they often move before the rest of the market even realizes what's happening. So when smart money starts to exit a market, it rarely happens in a dramatic way. There's no big announcement, no sudden crash. Instead, it happens quietly, gradually, almost invisibly. And that's exactly why this topic matters so much right now, because if you look closely at the current silver market, you can start to see the hidden signals. The first signal is the price behavior itself. Despite strong long-term demand for silver, the price has been struggling to hold its gains. Instead of continuing higher after the rally, we're seeing sharp pullbacks, weak recoveries, and increasing volatility. This kind of behavior often suggests that large players are reducing their positions. The second signal is the structure of the market. Recently, silver broke below an important level around $77. That level was acting as strong support. When a market breaks below support like that, it's not just a random move. It usually means that selling pressure is increasing. And when the price tries to bounce, it fails to reach previous highs. This creates what traders call lower highs, which is a classic sign of a downtrend. Now think about that for a second. If the long-term story of silver is still strong, if demand is growing, if the fundamentals are positive, then why isn't the price moving higher? That's where the idea of smart money comes in. Because large investors don't just look at long-term demand, they also look at macro conditions, things like interest rates, currency strength, and global risk sentiment. And right now, those factors are not very supportive for silver. The US dollar is strong, interest rates are still relatively high, and when that happens, metals like silver become less attractive compared to assets that generate yield. This creates a situation where smart money might decide to reduce exposure, at least in the short term. Another important signal is the nature of the recent rebounds. After each drop, the price tries to recover, but the recovery is weak. It doesn't have strong momentum. It doesn't attract aggressive buying. This suggests that buyers are hesitant or that large buyers are simply not stepping in at these levels. And this is where many retail investors get trapped, because when they see prices drop, they assume it's a buying opportunity. And sometimes it is. But other times, it's a sign that the market is still adjusting, still searching for a lower level where real demand will return. Now let's talk about the bigger picture, because this is where things get even more interesting. Silver is not just a precious metal, it's also an industrial metal. It plays a critical role in solar panels, electric vehicles, electronics, and many other technologies. And as the global economy continues to shift toward clean energy and advanced manufacturing, the demand for silver is expected to increase. So fundamentally, the long-term outlook for silver remains strong. But markets don't move in a straight line. Even in a strong long-term trend, there are periods of correction, consolidation, and repositioning. And what we might be seeing right now is exactly that. A repositioning phase, a phase where smart money is not necessarily abandoning silver, but adjusting their positions based on current conditions. So the question becomes, what happens next? There are a few possible scenarios, and each one tells a different story. In the bullish scenario, the current drop is simply a temporary correction. The $70 level holds as strong support. Buyers step back into the market, and silver begins to recover. In this case, we could see prices move back toward $80 and eventually retest the $90 level. This would confirm that the long-term uptrend is still intact. In the bearish scenario, things play out very differently. The $70 level breaks, selling pressure increases, and what started as a correction turns into a deeper decline. In this case, the next targets could be around $65 or even $60 if panic selling kicks in. This would suggest that the market needs more time to stabilize before any meaningful recovery can begin. And then there's the neutral scenario, which is often the most frustrating for traders. In this case, silver moves sideways between $70 and $80 with no clear direction. This kind of consolidation can last for weeks or even months as the market digests previous gains and waits for a new catalyst. Now here's the part that most people overlook. Smart money doesn't just exit markets, they rotate. They move from one opportunity to another. They reduce exposure in one area and increase it in another. And sometimes they even come back to the same market later at better prices. So the idea that smart money is leaving silver might not be entirely accurate. A more accurate way to think about it is that smart money is repositioning, adjusting to new conditions, waiting for the right moment. And this is where understanding market psychology becomes so important, because markets are driven by emotion as much as they are by data. When prices are rising, people feel confident. They buy without hesitation. But when prices start to fall, fear takes over. People panic. They sell at the worst possible time. And this is exactly what smart money takes advantage of. They buy when others are fearful and sell when others are greedy. So if you're seeing fear in the market right now, if you're seeing uncertainty, confusion, hesitation, that doesn't necessarily mean the opportunity is gone. In fact, it might mean the opposite. But timing is everything. If you're a short-term trader, this is a very challenging environment. The market is volatile, unpredictable, and driven by external factors like central bank decisions and geopolitical events. In this case, it's often better to wait for clear signals, a confirmed breakout or breakdown, before taking action. But if you're a long-term investor, the situation might look very different, because from a long-term perspective, the fundamentals of silver are still strong. Demand is growing, supply is limited, and the role of silver in future technologies is becoming more important. So instead of trying to predict every short-term move, a long-term investor might focus on gradual accumulation, buying small amounts over time, taking advantage of dips without trying to time the exact bottom. Now let's bring everything together. The silver market right now is at a critical point. Prices have pulled back significantly, key support levels are being tested, and there are signs that large players are adjusting their positions. But this doesn't necessarily mean that the story is over. It might just mean that the next chapter is about to begin. A chapter where weaker hands are shaken out, where uncertainty creates opportunity, and where the market prepares for its next big move. So the real question is not just whether smart money is leaving silver. The real question is, what are they preparing for? Are they stepping away because they see more downside ahead? Or are they simply waiting for the right moment to come back in at better prices? Because if history has taught us anything, it's this. The biggest opportunities in the market often come when things look the most uncertain. And right now, silver is full of uncertainty. So what do you think? Is this the beginning of a bigger drop or the setup for the next major rally? Let me know your thoughts in the comments. And if you want to stay ahead of the market and understand what smart money is really doing, make sure to like this video, subscribe to the channel, and turn on notifications, because the next move in silver could surprise everyone.